Hi there, this is Mike Kramer of My Capital. Today is Tuesday, August 6th, and it's around 4 p.m. New York time. We have a boring economic calendar, at least for the end of this week. The big numbers will be the initial jobless claims that come every Thursday. Obviously, given the weaker than expected job report on August 2nd here in the U.S., this jobless claim number is going to start gaining more attention every Thursday. So this is a number that you're going to want to pay close attention to when it comes out on Thursday morning. Otherwise, we're really going to have to wait until next week on the 13th when we get the PPI, and then on the 14th we're going to get CPI. CPI is looking at this point like it's not really expected to be much of an event. 0.2% on the month-over-month reading for headline, and a 2.9% number down from 3% last month. So at least from an economic standpoint, calendar's kind of light here. When we talk about a market standpoint, certainly the activity taking place in the market has been anything but light. And as we began to discuss last week, the last time we checked in on around July 30th, we were talking about the Japanese yen carry trade unwinding. We were talking about the spreads contracting, and we can see the yen has really had a very dramatic drop since that time. And when we look at the yen, at least at this point, we can say from a technical perspective, the yen is oversold, and it wouldn't be surprising to see this thing bounce from a technical perspective. The bigger question is what's the situation really look like beneath the hood in terms of leverage and exposures? Because unfortunately, in certain situations, if you need to close a trade out because the short's going against you, you need to close the trade out, and technicals go out the window. So right now, I would say that looking at this chart, you're looking at like there's some resistance here around the 146.30 area. At least that's where we got to today. And that's the region that we tested 2 times and failed. So in this view, if we can get above the 146.30 region, which is right in here, you're talking about the potential for maybe some further upside. And that's going to probably give overall markets globally some relief, could allow equities to even rally. But if for some reason we're not able to, and we were to start moving back down towards this 141.65 region, or even break those lows, and break into the 139s, that would certainly add to more pressures that we're seeing globally at this point in time, and something that we really need to be aware of. So while from a technical perspective, we can certainly say there's a good odds that this is going to bounce at some point, at least, or consolidate sideways, at least for a couple of days. The bigger question, though, really is what's really going on beneath. What's the situation like in terms of margin calls and things such as that, because moves like this are going to obviously inflict a lot of pain, and we really don't know what the complete fallout yet is going to be, or what it has been. And this is really affecting markets everywhere. You can even see the British pound broke out, and it looked like it was going higher. Then we got hit with that surprise BOE rate cut. And all of a sudden now the pound is really starting to weakening again versus the dollar. In fact, we broke below the 128 area, which was that big area that we had been testing months after month. We finally broke out. It looked like maybe it was going to get the all clear, and here we are back again below 127, now moving back in below the downtrend. And right now you have to think that we're probably heading towards an area of support around the 126.20 area, maybe even lower than that, around 125.5, because again, this is clearly a dramatic shift in trend. It's a dramatic shift in sentiment. When we look at the euro's actually been picking up a little bit, because we kind of have a pretty good sense of where the ECB is going with monetary policy. And we know the job numbers in the U.S. have been a little bit weaker. If we were to get initial jobless claims or continuing claims coming in hotter than expected come Thursday, you could really start seeing the euro start outperforming again and moving back up towards this 110.5 region. Otherwise, I don't really know that there's enough here to really say that the euro has decisively broken out. We really need to see some further movement, because all we've done at this point is really just get up to resistance. So again, the opportunity probably comes Thursday morning if you're going to see a breakout in the euro to the upside above this 110 region. That's probably the best opportunity for that to happen. Otherwise, we could just as easily be looking at a euro that's going to be heading lower again, back towards this 108 region. When we look to copper, copper continues to get hit really hard. I mean, at the end of the day, copper is just a risk asset like everything else, and copper is getting hit along with this Japanese yen carry trade unwind. You can see basically going back to this point right in here, the copper's really also been trading with this winding process. And the big level we're watching right now comes at this 390 region. That's obviously the area of a lot of support. We are, down here around 30 on the RSI. So certainly at a place and a point where we could see some consolidation, although I would probably look for further downside here in copper, maybe to around 387. That's where that lower Bollinger Band is. And given that we aren't really all that oversold on the RSI, I think there'd be further room to go to the downside here for copper. When we look at gold, gold continues to really just trade sideways. I know a lot of people have made a big deal about gold getting up to around this 2,500 area, but basically gold has just been trading sideways now for some time, and this looks a lot to me like just a megaphone pattern. With your wave cycles here, with the potential for this to complete and come down to this lower bound here around 2,300. The interesting thing about this structure is that there's a little bit of a tilt higher to it, and usually when you see patterns like this, which have these flag patterns with these rising, broadening wedges, they tend to lead to breakouts to the downside. So I would be watching this lower bound around 2,300. If that is retested, look for a breakdown to around 21.25. I think that's probably the setup that we're looking at right now. When we look at the FTSE, we were talking last week about watching the range, and clearly the range broke. And not only did it break, but it broke in a major way, because we got the first move was higher and then the next move was down. And so basically when we're looking at what's happening here in the FTSE, what I'm kind of thinking about here at this point is, this looks to me like we got an area that had been resistance in the past. We basically tested that level. You can see it had acted as support previously, resistance in this case. You hit up to against twice, you basically failed, and you just moved lower. Again, we've talked a lot about the correlation between the FTSE and copper. The two have really deviated a little bit over time. And so it could just very well be the case that they're actually coming back together again. So keep an eye on copper prices. If we start seeing copper moving down, I think that the reversal in the FTSE is pretty significant. This obviously would be a major level of resistance right in here around 8,100. If we were to see it move up, test 8,100, that would be where I think there would be some resistance. Otherwise, if copper keeps heading down, markets are in more of a risk off mode. 77.80 or so probably makes a little bit more sense. The DAX has also been hit pretty hard more recently. The DAX is also pretty close to some of these oversold conditions with an RSI about 30. You can see we're also trading below the lower Bollinger Band. So this is a condition where I would also look for some sideways consolidation, maybe coming back within this Bollinger Band that's probably going to curve, and potentially giving us an opportunity to consolidate sideways. We haven't really seen a big rebound in the DAX yet, so we're just going to have to wait and see how that plays out. We obviously have filled a gap from back here in February. There's also a lot of support in this region going back to the end of last year around this 16,850. So I would expect that this lower bound area, I would say below 17,550 is probably a reasonable spot to look for some form of consolidation sideways, at least before it sets up for the next major move, just so that it gives us some time to build that RSI up and to move back within the Bollinger Bands. The Nasdaq's obviously been hit pretty hard over the last couple of weeks here. We can see that the Nasdaq is down about 12.5%. The Nasdaq got really oversold yesterday morning when the RSI and the Bollinger Band both got below the key levels. You can see that today we came back in to that Bollinger Band, so a little bit less oversold than what we may have been yesterday. On the hourly chart, what we can see in a little bit more clearly here is that at least today we had created a gap from the sharp decline yesterday. It looks like that gap is pretty much filled. I guess you can make a case that maybe there's a little bit more upside potentially to it. If you were to do it from here, you could see maybe there's a little bit more room. So this gap, potentially it's filled, maybe it's not filled. I think it's really splitting hairs at this point. So the way I'm looking at this is we got to resistance in this area, was kind of the lows that we had on Friday. We basically got there, and that's where we failed. So 18,353, very much like the yen. We got to that key level today, tested it a couple times and failed. Basically the same thing that we're seeing in the NASDAQ. And when you look at the Japanese yen and you just overlay it with the net price action in the NASDAQ, I mean, it's basically the same price action. So again, if you start seeing the yen moving down, probably a good bet that you're going to start seeing the NASDAQ moving down as well. Likewise, if the yen starts moving higher, pretty good chance you're going to start seeing the NASDAQ moving higher as well, because that just seems to be what the trade is at this point in time. Again, at least at this point, until we get above this 18,350 region, I think you're looking for lower prices. Obviously, a break opens the potential to fill this gap all the way up to 18,900. The Dow didn't get quite all the way back to filling the gap today, but again, a very similar sort of scenario where you can see we got up to this area, what I would call as a resistance area. Again, the two bottoms from last week, we basically failed there. Again, it wouldn't be surprising to me to see us testing these lower levels. And again, just like the NASDAQ, I mean, pretty much, all these equity markets here are just really trading with the Japanese yen. So the Dow a little bit less so, but for the most part, I think using the yen right now as a guide is really going to help you at least understand what's happening with these markets on a daily basis. S&P 500, very, very similar setup. We can see that the S&P, again, got up to this resistance level, failed at resistance, and at least for right now, it looks like we're going to find out whether or not there's any support in this around this 52,300 region. Otherwise, I mean, you're looking at a market that probably still has further decline. It had a very big move higher. There's a giant gap still to fill down in this region at around 5,064. It wouldn't really be surprising to me to see that gap close at some point in the near future. Again, we tried to get back into the Bollinger Band today, didn't quite do it. So this is an area and a spot where, again, you can continue to see some consolidation, but I really don't think that the markets are out of the woods by any stretch of the imagination at this point, especially given the late day price action we saw here in the U.S. Anyway, I hope you found this helpful. Have a great rest of your week, and we'll see you next. Bye.